What's going on, everybody, and welcome back to another Next Big Thing HQ episode of This
Yep.
Week in Crowdfunding. We're no longer the Next Big Thing. We are the Next Big Thing HQ. So make sure when you're searching for us on YouTube that that's what you type in. This week, kind of a slow week, I would say, again, in the Reg CF industry, but there was one really interesting article that Crowdfund Insider put out, which will be the first thing we talk about. So this came out about 9 hours ago, and the headline is Reg CF deals decline by 27% year over year during quarter three, while amount raised moves higher by 10.6%. Very
It's a
interesting
lot.
trend that we've been seeing. Yeah, very interesting trend we've been seeing. So basically, the amount of deals is going down, but the amount raised is going up, which is an interesting kind of trend. So Connor, what do you make of that?
So when I hear that, I immediately think, okay, it's 2023. What happened 2022? 2022, the startup industry, the VC industry wasn't funding as many startups, right? There's a lot of cash on the
Right.
side, a lot of dry powder on the side. So I immediately read that article and thought, well, startups didn't have much of an option to get capital from, so they had to go to crowdfunding platforms to raise capital. Now, VCs are starting to invest in startups and starting to get rid of a lot of the dry powder they saved because they thought the recession was going to come, and they're starting to deploy that dry powder. And so I think now startups have a lot more options when it comes to raising capital. So that decreases the amount of deals in the equity crowdfunding platforms. However, you saw the demand increase because the amount raised increased by 10%, which means the equity crowdfunding platforms are getting more and more traction. People are trusting those platforms more. The industry is growing. There's more excitement, and probably the deals are better. The companies that are coming to these equity crowdfunding platforms are more qualified. They have more revenue. Sometimes it seems like quite a few of them that we've talked to, quite a few of the founders that we've talked to said that they're even profitable and they just want to get
Mm-hmm.
some consumers or some users of their product
Yeah.
involved with the company and as investors. So I read it as a very good sign that the supply is shrinking, but the demand is increasing. And I think that's going to be good for the overall market in general.
Yeah, no, there's actually a line here that backs up what you just said, which goes to valuations, which I feel like I've talked about every week. But crowdfund capital advisors, which is the people that did the research and put out these numbers, they're I think it's their what is it? The president of the principal at CCA, Sherwood Nice, is a really good follow on Twitter for crowdfunding people, but. They said that average valuations continue to increase, now standing at 15.3 million, which is a quarterly record. Post-revenue firms held a median value of 18 million, while pre-revenue firms were valued at 15 million. So, I mean, there's two ways to look at that, but one would be to back up what you just said, which is that better companies are out there in Reg CF, which is a good thing and which would explain the bigger check sizes.
Yeah, I guess the only concern I have is just the valuations. I wish there was a better way to properly have these companies, these startups evaluated for a lot of the unsophisticated investors or a lot of the non-accredited investors that don't really understand the industry, don't understand the benchmarks, and just want to invest to invest. So I do think the quality of deals have gotten much better. And you look on WeFunder, Start Engine, Republic. I mean, a lot of those startups look amazing, and they look like they are really getting a lot of traction and really creating something special. One of the more interesting points I saw was the number of deals per platform out of Dealmaker,
Mm-hmm.
Start Engine, and WeFunder. What do you think? What platform do you think had the most? And this was Q3.
So I'm in a little bit of an unfair advantage because I have it right in front of me. But my guess, my guess before and I know is the right answer would be WeFunder, and
Yep.
I feel like during the last probably 6 months to a year and a half, they've really separated themselves.
Yes.
And for me, the way they've separated themselves is just quality of company. And I know we saw a couple graphs back a few months ago that said that that may not be the case. but when I go on WeFunder, I am seeing a lot of companies with good revenue numbers and attractive branding and attractive products. And the way I
Yep.
tend to judge startups, um, or especially DTC startups, is would I use that product? Could I see someone using that product? Could I see that becoming a part of my daily life? And I feel like more of those companies are on WeFunder than on any other site right now.
Yeah, and I forget where I heard this, but I also think WeFunder has a partnership with YC. They either have a partnership with
Yeah,
YC or they make the Y
they have a ton of
Combinator
YC startups.
a filter, right? So when you filter
Yeah,
startups you want to invest, you can click it has to be a YC founder. And then boom, you get all the YC startups. So I think that's really cool. I also think the platform, I enjoy going on the WeFunder platform a lot better. Like
I
the
agree.
user interface, the user experience is, I mean, I think those are two completely different terms, but I enjoy it from the user's perspective, searching on WeFunder compared to searching on Start Engine.
I have to agree with that. I want to go back to something we talked about a minute ago, which was valuation, and we brought it up so many times, and I feel like maybe it's time we dive deeper into it. Um, do you see a solution to the valuation problem? What would you say is a reasonable solution for these platforms to start ensuring valuations? Because it's very hard to value a company in general at this stage, right? Especially
Right.
pre-revenue. Do you think that there is a path forward, or do you think this is just a problem that is probably just going to have to be there?
I think it's a problem that's going to be there. I don't think there's a solution because it's a startup. Because it's a startup, you're going to value the company based on its idea? Well, that's not right because the company has to execute that idea. And then half the time too,
Right.
it's a startup, so they're still trying to figure out what their specific business model is. And I always think about valuations and why coming up with a structured valuation is so tough. If you look at Tesla, I remember 2016, 2018, 2020, everyone was always saying, oh, Tesla, it's valued way too high. It's valued way too high. Car companies aren't valued like that. Well, it turns out Tesla isn't a car company. It's a data automation company. It's collecting
Yeah.
so much data. And so if you knew it was a data automation company, you would have valued it, where the market valued it. But everyone that was saying the market's wrong, it's not valued that high, it should be much lower because it's a car company, they turned out down the road, 5 years later, that they were wrong and they just completely misunderstood the business model. So I think that's the problem with trying to value startups properly. There's no real proper valuation. And there's different
I couldn't
metrics
have said
too,
it any
right?
better myself. Yeah, I agree with you totally. I'm not even going to add to that because that's exactly the way I feel. Um, I think there is, um, valuation is such a huge part of investor returns, and I don't think that is understand. So maybe this would be what I add. What is not understood by less sophisticated or non-accredited investors is how important valuation is to your actual return multiple.
Yep.
And I think that there needs to be a little bit more transparency in that way. And I don't know, maybe, I would like to see if they do expand the accredited investor rule to include some sort of test or something. I think that, really valuation and how you value early companies needs to be a part of that.
Yes.
Because I think it is one of the most important things to understand when you're investing in startups.
Well, I was just going to say a good point about that, about what you just said was Instacart, right? We saw Instacart's valuation soared, and then, got discounted 80% when they IPO'd. And you saw how it affected all the investors dating all the way back to 2015 just because they got the valuation wrong a little bit. The valuation was a little too high compared to what the company actually was.
Right. Totally agree. So should we move on and talk about the SIL?
Yeah. And Brendan and I, after we talk about this article, we have some extremely exciting news. Exciting news.
Yeah.
Kind of want to talk about it right now, but we gotta continue talking about valuations, and we'll talk about the SIL.
Yeah. The valuation plays nicely into the SIL conversation, but yeah, stay tuned for pretty exciting, probably one of our more exciting announcements to date. So Connor, tell us about the SIL a little bit.
So I think we talked about the SIL a little bit last episode, but the SIL is a very interesting startup that they're currently raising. I think it's on WeFunder. Let me
I
double
believe it
check.
is on Wheat Thunder.
Uh, yeah, WeFunder. So very interesting. I think the most interesting part is that it's an uh, omni-channel retail for plants where you can buy house plants from online, and they also have 7 storefronts. For, I think 4 in New York City,
Yeah,
and Crowdscale, great Twitter. Check him out. He does a great job kind of breaking down the crowdfunding ecosystem and
yeah.
giving
Good
tips,
newsletter.
pointers. Great newsletter. Highly recommend. But he wrote a newsletter based talking about the SIL and just talking about the current valuation the SIL has and how their valuation right now is at it says zero point 0.5 revenue multiple, and usually the valuations are between a 3x and a 7x revenue multiple. So they're doing it at a zero point 0.5 revenue multiple. So the valuation is 7.3 million for this current round. Last year, guess how much they did in revenue?
Isn't it something like 50 million?
Well, that was since 2020. But last
Okay.
year they did 13 million, right?
Oh my God.
So that's where and the valuation in 2021 is 16.5 million, 2022 was 13.4 million, 2023 maybe those are the revenues. In 2023 they're forecasted to have 10 million. So it's a decline,
So
but
what's the catch?
I think the
What's the,
catch
is
is
it the catch just that it's declining?
I think so. The catch is revenues declining. They're also trying to make it enticing for investors to invest in the startup based on the valuation to get more
Uh-huh.
capital. I This is what I like about the SIL. The SIL does a
Okay.
great job with social media. I think on
They
Twitter,
do.
no, on Instagram they have 775,000 followers. So just that alone, if you think about how many followers that have, and Brandon, we were talking about this earlier. It's a lot harder to make money and then gain. Well, the hardest thing is to gain an audience, but once you gain an audience, it's pretty easy to use your audience to help monetize in some way, some form, right? And having
Right.
775 million followers for a startup that sells houseplants, that's very impressive. And so I'm just interested because they have such a big audience, and I just know when you have that, you just have to figure out how to capitalize it a little bit better. But I feel like they can do
Yeah,
something really, really big.
it's almost the opposite of what we've been talking about like the last couple of weeks, which is like, pre-revenue startups with huge valuations. Now this is a post-revenue startup with an incredibly low valuation, it would seem, based on that multiple. So I don't know. My pessimistic mind says, is there a catch? I don't know. I've seen their social media. They clearly do a very good job. It seems like they have a pretty good audience. I wonder what it is here, or maybe it's just a great deal and they're doing something smart by saying, "Here, we're going to give us a low valuation and we're going to try and get as much influx of capital as we can." I'd love to have their founder on. What's her name again?
Esla, Esla Blank,
Eliza.
Eliza Blank.
Yeah, I would. I mean, I'd love to
She's
have her on.
Yeah. I mean, she seems brilliant, really smart. And this is the thing: they sell house plants, and they had $10 million in revenue selling house plants. You know how impressive that is?
That's incredible.
And
People
they
don't get
have
to
it
$10 million selling calculators.
right, and they have an online they have an e-commerce brand or the e-commerce site that they sell a lot of house plants from. So it's I think just the fact that they've been able to have over 50 million in revenue since 2020 selling houseplants, which I didn't even know there was a market for houseplants. If I'm being honest, I mean, my mom would go to Home Depot and say, "Ooh, these flowers look good," but I didn't know people bought
I
plants
don't know a
like
darn
that.
thing about buying a plant, man.
So, and then to have that many followers too,
Yeah.
so that's why I think there was a decrease in demand after COVID because I think a lot of people wanted plants when they were trapped in their house during COVID. And then
Right.
there was a decrease because people are now able to get out more and more from 2020 to now 2023, slowly, like less restrictions, getting out more. As Jason Calacanis says, YOLO summers, right? Just going traveling.
Yeah.
So I think there was less demand for house plants, but to still sell over $50 million from 2020, just people buying plants is so impressive. And there's definitely a market out. There's a market out there, and I think it's only a matter of time before they figure out how to capture that market.
Yeah. No, I'd love to have Eliza on, learn more about the industry. Maybe what are revenue multiples for a houseplant company? I mean, I don't know. Maybe they're the first, and we just don't have a
Yeah.
multiple that we know about. So I'd love to have her on. Hope she watches that segment. But we have heard a lot of great things about them, and I would go check them out. It seems like it's an interesting deal to check out. So now, since we already buried the lead a little bit, let's get to our announcement. We will be having the CEO of DoxyChain.
CEO. Yep.
The CEO of DoxyChain. His name is escaping me right now.
Ian
Can't
Lau.
remember name. Ian Lau will be on the Next Big Thing podcast in a few weeks. 2 weeks, I believe, right?
2 weeks.
We'll have him on in 2 weeks, and we are super excited. I believe it's the first podcast interview he's done in the industry. I haven't seen him on any other podcast, so we are super excited to ask him some questions and get to know a little bit more about how they're revolutionizing ECF. So, number one, for all of you out there, if you have any questions for him, feel free to submit them in the comments below, or email
Please.
us at nextbigthinghq.com, nextbigthinghq@gmail.com, or DM us on any of our social media platforms. So any audience questions out there. And I'm super excited. Blockchain was something, I guess in the crypto craze of a few years ago that I was interested in. I understand the way it works to enough to be dangerous, but I'm excited to learn about how they're utilizing blockchain to transform ECF. So I couldn't be more excited for that interview.
One, to me, this is how I always thought blockchain would be used. When in 2021, 2020, when you heard people saying, "Oh, crypto uses blockchain," and then you saw people just kind of making coins, but there was no functionality. It was like, oh, kind of, what is crypto? What is blockchain? But what DoxyChain is doing, that's how I always envisioned blockchain to become, and the functionality behind blockchain, and why people want to start having more coins or a cryptocurrency that's connected to blockchain. And so I'm really excited for that. It's, I really think it's going to change the industry.
Yeah, I mean, when it comes to trust and security and, things like of that nature, I mean, blockchain is the gold standard we have right now.
Yes.
So, in an industry that is sometimes cloudy and sometimes, you have to do your due diligence in this industry for sure. I feel like blockchain could add a really interesting component. So we're super excited to have Ian on, and I'm really looking forward to that interview and sitting down with him. So that will be released in, I think, 2 weeks, and I'll put the date of the interview release out at some point. But
and thank you to all the followers that tagged us and tagged him and really pushed for it on Twitter just to make it happen. We really appreciate y'all.
Yeah.
I don't think this would have happened if we didn't get the support from y'all to really make this happen. So thank you for doing that and making our dreams come true. So
yeah, I mean, that's an extremely important part of it. I mean, the reaction that we got from our followers and the support that we continue to get is what helped us get this interview. So thank you very much for that. And if there's people out there that you would like us to talk to as well, continue to send them our way and mention them and tag us and tag them. It means the world to us, as Connor says before a lot of the interviews. So another thing I wanted to announce before we go into our last story of the day, our friends over at Hubtoss, Ashna and Tim, just hired Caleb Naismith to the team over at Hubtoss. There's a tweet that Caleb sent out that I believe we retweeted or quote tweeted but they are continuing to attack the market of equity crowdfunding analytics. So I just wanted to, say congratulations to Tim and Ashna. They continue to do great work, and I'm hoping the best for them. So, now our last story of the day. I obviously dropped this on the ground because I'm an idiot. This was an interesting one. So it's not necessarily a data one, but I thought it was cool, the picture on the article. So I decided we were going to talk about it. An all-electric company. They make 4x4s, cars. Munro reveals latest design enhancements in crowdfunding round. They basically make these all-electric 4x4 SUVs. It kind of looked like a Jeep Wrangler a little bit. I'll put a picture up there. Really cool looking truck. I don't know, Connor, you have any thoughts on this?
Well, it's a Scottish company, right? So I thought that was interesting. Scottish startup, yep. And I can't remember the last time I've seen or heard about a Scottish startup. So I think that's exciting, and it's exciting knowing that they're going the Reg CF route. My first initial thought, though, was more on the car industry in general, and how after Elon Musk disrupted that industry with Tesla, there's been so many startups trying to get into that EV industry or just the car industry in general and create their own brand. Right. And before Elon, there wasn't much disruption in that market. Now there's a lot. And I always think the market has to get better with more and more startups coming into it, like the car industry. It has to get more innovative. Mm-hmm. But I think Tesla has such a competitive advantage over everyone else that all these other companies are competing for second, third, fourth, or fifth, and no one can come close to Tesla. With Tesla's Gigafactory, with what they're doing with the full self-driving cars, and they're a data automation company. We kind of talked about it before. So that was my initial thought. What do you think?
Yeah, I kind of had two different thoughts. One was the fact that electric won't be widely adopted unless it can become cost efficient. I mean, it's just like any other thing in the world, and what's going to bring cost efficiency is innovation. So it's nice to see that companies are continuing to go that route. And this is the first car company I've seen go the Reg CF route, as you said. Yes. So interested to see if they can build a nice loyal following there. And on the car industry, what I found interesting is when you think of cars, right, you think of the incumbents, right? You think of Ford, you think of GM, you think of Toyota, you think of Nissan, Honda, right?
Right.
I just saw Kia came out with a car, which I've never owned a Kia car in my life.
Did it look cool?
Kia came out with an all-electric vehicle that looks like really, really awesome. Really? So I think it also, the car industry is brought an opportunity for those mid-market incumbents, not necessarily the Chevys, the Hondas, as I said, for them to capture a market share that basically everyone's just grabbing for the other piece of the pie that Tesla hasn't taken over yet. And Tesla continues to bring down the price of their car, which is why I'm super excited to see what they do. But that's about all you'll hear from me on the car industry. But I did think that was interesting. I see 2 car articles in 2 days, one on this Kia electric car and then this on Munro. So again, would love to have Munro's CEO and co-founder, as it says here, Russell Peterson. So if Russell sees this and would like to come on and tell us about Munro, we'd be more than happy to have him on. And yeah, it looks like a pretty cool car. It looks like a Jeep.
There are a couple cars going the Reg CF route that I've seen I saw one on Start Engine, I think called Selena, and another one on WeFunder called Olympian Motors. And it's if you were to go back 10 years from today and say to your younger self, there's going to be so many new startup car companies in the next 10-15 years, you will not believe it, because you'd say, no, all I see is Toyota, Nissan, Ford, right? All the big car companies. But now with EV, the big car companies are very slow to adopting and going the EV route. And all these startups are trying to take advantage of that and get a head start. So I think over the next 10 years, the EV industry and the car industry as a whole is going to be very exciting to watch and see who comes up on top besides Tesla, because we both know Tesla is going to stay on top. You can't bet against Elon, right?
unless somebody comes in with a haymaker, and I haven't seen that yet. So, also made me think of when we had Lin Su Fa on Lin
Mhm.
Sun Fa of Ion Charge on I think it was episode 10, and he was super insightful into the EV industry. So actually, if you're interested in the EV industry in general as it relates to Reg CF, go check out that
That's a
interview
good
with
episode.
Lin Sufa. So I'll put the link down there to that. They were doing something with they were doing a charging technology
Yep.
that was really interesting. Charging connectivity technology, payment platform, I believe, right?
Yes.
All right.
Yeah, because I think
So
that's the big hurdle, right, for EVs is just how do you get your vehicle charged? I know in Charlotte that was a big problem. One of my buddies has a Tesla, and he'd have to drive to a Walmart 16 miles away, charge it,
just
buy
to
his
charge his
groceries,
car.
and then sit in the car for like an hour watching Netflix so it gets fully charged, then drive home. And he had to do that maybe
Well,
once a month, but still, that inconvenience is enough for you to not get an EV. But now more and more
yeah,
chargers are, popping up all over the place. And I'm sure soon enough we'll start to see, instead of gas stations, EV stations. And when that happens, once one pops up, they're all going to start popping
and
up.
100,000 will pop up. No, I
Yep.
agree. I think that does it for us this week, does it?
I think that's it.
Yeah.
So,
Again, a slower week. And again, congratulations to our friends over at HubToss, and a early thank you to Ian Lau of DoxyChain. We're excited to have him on. And as we said a couple minutes ago, thank you to all the listeners out there for your continued support. It means the world to us. So, yeah, if you don't have anything else, Connor, I think that'll wrap us up for this week.
I think that's it. Just thank y'all. We appreciate y'all,
Yeah.
and we'll see you next time.
Yeah, we will see you next time on This Week in Crowdfunding, coming at you every Thursday or Friday, usually Friday mornings, from Next Big Thing HQ. Subscribe on all platforms and follow us on all the platforms you can. And thank you for your support. So long.
Bye-bye.